A client came to see me at my real estate office now, wanting to invest in real estate. And like I do with everyone, I started asking questions to understand his situation better and to be able to offer him the right advice. So I asked him whether he owns or rent now. He said he owns his house and he has a mortgage of $800,000, which is coming up for renewal in the next few months. But he has $100,000 sitting in his bank account and he wants to invest it in real estate to generate some cash flow. Now, he was surprised when I asked him how much negative cash flow he could handle each month. Negative? He said, why negative? I'm putting 20% down payment. I explained to him, back in the day, when the interest rate was 2%, you could easily break even with 20% down payment when you buy a property. But today, with interest rates start at 7, 6, or even 5%, you're looking at needing minimum 35 to 40% down just to cover your monthly expenses from the rent. Now let's go back to our client's story. His mortgage is renewing soon, and with the current interest rate, he's looking at minimum $4,500 a month, not counting taxes and insurance and other expenses. Now that's a big chunk of his $7,000 monthly income. So when you take his income into consideration, he's not even qualified to get a second mortgage to buy a rental property, although some realtors told him it's possible and they can make it happen. In my opinion, this is not right, and I suggested a different approach. And instead of diving into another property and stretching himself too thin, why not use this $100,000 to reduce his current mortgage? This will make his monthly payments more manageable, and he's not over leveraged in a market that's tough for landlords at this time, especially in places like Ontario. Ontario is not a landlord friendly place. Plus, with the current interest rate, no matter how much the second property will appreciate in value, in the next 2 to 3 years, he'll end up paying more in interest to the bank compared to the property appreciation in value. So unless you are a savvy investor with a deep pocket looking to invest for long term, like minimum 10 years for example, and you have high income that qualifies you to get a mortgage properly, wait to buy the rental property with the current interest rate. Then he asked me, what about pre-constructions? Some folks are saying pre-construction is a good idea in his situation. Now let's talk about pre-construction investments. They call investments, but in my opinion, they are not investing. They are speculating, hoping to flip, make a quick buck or quick profit, but the market doesn't always play nice. I see many people lose their life savings because of this risky move. Now everyone's situation is different, and I'm here to find the best path for you. So let's chat and figure out how to make your real estate work for you, not against you.